Hi everyone, thanks for tuning into my channel. This is Sandeep Anand. Now, there is this tectonic shift that's happening in our daily lives. The way we consume things, the way we purchase things, whether it's groceries, shopping things, or furnitures, everything is shifted to online. We are using e-commerce applications. The large retailers are also shifting their strategy towards online and digital sales. Now, if you take the gross transaction volume and the gross retailing that has happened in US, the e-commerce share was just around 11, 12, 13% you could attribute to. And the shift to digital was already happening, and it's supposed to be like touching 40, 50% of market share in the next 5 to 10 years. But what is interesting is that the whole journey has been accelerated and front loaded in the last 4 5 months, and it's even going to accelerate in the next foreseeable future. What's interesting is, could this be the end of shareholder returns for Amazon or Shopify, shareholders of all these large retailers, online e-commerce retailers? I'm not saying these companies, it's the end of them. No, they're going to be existing and maintain the dominance over the next foreseeable 5 to 10 years, next decade at least. But will the shareholder returns be muted for a foreseeable future? And that's precisely the analysis I've done to help you to understand where we stand with respect to their future earnings potential, because market is future looking animal, and it will look at discounting the future cash flows, future returns, and are markets pricing in already the future returns of these companies. Take a look at this analysis. So before we start the analysis presentation, the usual disclaimer that there could be vested interest, and Sandeep Anand and sandcompounding.com might have vested interest on these stocks. So these are just for illustrative analysis purpose and not any sort of recommendation. Now, with that, moving forward, the first presentation slide is to indicate where we need to do a lot of market study in terms of when we do investing, and this is part of the cycle and the process. And first of all, there is a brilliant analysis done by Adobe called Adobe Digital Economy Index, and it's powered by Adobe Analytics, which is a very powerful feature, and it was published July 2020, last month. And we could see that key points to notice: in July, consumers were more open to going into physical stores, thus slowing online growth to 55% from 76%. So you can see that the shift to digital is not fully permanent. There could be reversal into the physical stores down the line when things starts opening up. Now, July generated around $66 billion in online spend. And look at this. This is the main key takeaway from this slide. The first 7 months of 2020 have driven $435 billion in online spend. That is much more than the last couple of years spent in the first 7-8 months itself. And the remaining period, looking at the way it is, it might be even exceed approximately $700 billion. So at the current growth levels, online spending for 2020 is set to exceed online spend for all of 2019, and by October itself. So there is like 2 months ahead of the curve, and that's that much of an increase in the online shopping. Now, this is Adobe's trend analysis that you can see in the graph powered by analytics. So you could see the difference of $93.9 billion actual spent than the expected spend. So there was an uptick of $94 billion towards online due to the restrictions and lockdowns. Now, here is a US consensus survey on the top rightmost, which shows the yearly and in fact quarterly projections every year, and how the e-commerce sales as percentage of total retail sales in US alone has grown. And you could see that from a meager 4 to 5% in 2011, from that point onwards, point to point, if you take 2011 quarter, it was 5%. It has tripled up to 2019, where it has reached almost 13-14%, and currently we are anywhere between 16 to 17% probably at the end of the year, the way it is projected. So it has gone up 3 times, just the overall retail commerce, e-commerce market itself. So the stocks, individual companies in that, especially the leaders like monopoly like Amazon, which has 35% market share, is dominated by 1/3 of the market share, wallet share. The companies like Amazon has grown leaps and bounds during this period, and there's no no magic. Now coming back to the next slide, here is the total retail sales in US, $4.5 trillion. Currently, it is reduced due to the economic holdup, and it used to be $5 trillion in last year. Now it might go back to the same levels or even could increase. Now online grew by 18% in 2020, online retailing, and it's currently standing at $710 billion, which is 14% of the total retail share, and remaining 86% is still dominated by physical retail. So you can imagine what kind of shift is expected in the coming decade in the e-commerce sector. So the total addressable market size is going to be huge. There is a 36% shift, because at in come 2025 we could be looking at a total percentage retail share, e-commerce retail share, at an anywhere between 40 to 50% is the way it is growing. So if it's a 50% growth, then it means that we are looking at another 36% of addressable retail, physical retail market share shifting towards digital, which means the whole pie chart would be distributed into two parts, 50% each approximately. So the total addressable market size ahead for all the e-commerce companies put together just in US alone is $1.3 trillion for the next coming decade. Now, here is Amazon's results, Q2, the latest results. It's very interesting pie. I mean, you could see that the retail still is 78% of Amazon's revenue share. And the cloud, cloud is anywhere like 11%, still growing faster. And you have advertising, which has been gaining pace. It's almost 4% now. And subscription like Prime and others with around 7%. So with this kind of distribution, Amazon's current total retail revenue quarterly is $70 billion, and out of which it is distributed between North America and international. And if you just take North America, it is around $55 billion. And projected annual sales for Amazon is around $275 billion. So what happens now? Let us assume that in 2025 the similar growth consistently increases, the shift towards digital increases. The total retail sales in US could be anywhere between 5.5 to $6 trillion. The prime reason for this could be the pent-up demand in the current the scenarios. Next 2-3 years would see drastic increase in the sales, and online retail sales will be around $2 trillion. If it is like 50% of total retail is online, then it would be looking at around 2 trillion. The reason being, I'm subtracting the whole retail sales numbers includes auto and fuel, so you need to reduce that part. So if you reduce that, you will get approximately $2 trillion online retail sales in 2025. And the wallet share is distributed on the right side. You could see the total 2 trillion online sales revenue share would be distributed in such a way. So if Amazon continues to grow the way and continues to retain market share, it could be looking at a total pie of wallet share of around revenue sales figures of around $600 to $700 billion. But there's a big if. So if Amazon's market share, retail market share, reduces to 20% from the existing 30-35%, we could be looking at Amazon maybe having just $400 billion out of $2 trillion market share, and the remaining being distributed to Walmart, which is gaining pace huge at a rapid pace on the online front. And Walmart currently has around $40 billion at 5.6% market share in e-commerce, US e-commerce. It could be looking at around $120 billion in the next 5-6 years. And remaining, Shopify currently at $2.8 billion. Shopify could see tremendous growth ahead, and it could be roughly looking at around $20 billion if it continues to grow at this pace. Etsy, and there are many other players like there is a specialized retailing like Chewy, Etsy, and all. They're like $1.2 billion for Etsy. It could be anywhere looking at $10 billion if it continues the growth. Now there are then the standard big giants like Costco, Costco, Target, Home Depot. These kind of players will make it shift towards digital from physical. So that's where the other pie is going to distribute. It's not that it's going to go to Amazon or others. It's going to be these players are going to shift digital, like Costco, like Home Depot, like Target. Big commerce is one of the new player in the ground, like Shopify, enabling commercial aspects, to get online. And there could be many new players on the pipeline. We don't know at this point, and many are in the making of to become the Shopify's, the next ones. Now, this is an interesting shift that we can look at from physical retailing to the online digital space in the e-commerce space. And now, with all this said and done, the topic I was referring to in this particular video was, is it all over for Amazon and Shopify in terms of their growth? Actually, from this, you can understand the growth is still ahead. They're going to continue to grow, and they are going to continue to retain market share, whatever they have. And Shopify will become much bigger than this. Many of the new age players can become bigger than this. But the point is, stock market returns may not be directly indicative of the earnings point in time. It could be pricing it well ahead of the time. That's what market is known for. And precisely that's what my point is. And putting it all together, the takeaway from this is, for online retailing firms, the average price to sales historically, the last couple of decades has been 4 to 5 to 6, depends on the amount of growth. Now, Amazon's average price to sales over the last decade was 3.8 to 4. Now, Amazon looks priced to perfection on their retail revenue potential in the next 4 years. And what I mean by that is, today Amazon has around retail share of $275 billion in 2020. It could go up to maybe $400 billion, assuming that the revenue share reduces from 35% to 20% because of the new age growth companies like Shopify. And also, it would mean that from 270, 250, 275 billion dollars, you're looking at just a small uptick. It's not even doubling the total revenue in the next 5 years. But although they're going to grow at a rapid pace, like 25-30%. Now, their cloud business is continuing to grow at 29-30% based on the current run rate. So which could keep increasing its share in the total pie. So from 11% revenue share of cloud can go up to 20% in the next 5 years, potentially. And the retail share in the revenue pie can start shrinking. And we could be looking at a completely different mix for Amazon. But putting it together, the advertising growth is helping Amazon. It's growing faster. So, looking at it, it could be valued at around $2.5 to $3 trillion by 2025. That is considering a $450 billion sales and and AWS growth and all of that put together. You could be looking at a max of 3 trillion. That is like almost a doubling from this point. And so Amazon is still that's still 5 years doubling is like 15% stock returns approximately. So which is still good. Now, the other part, Shopify, could be valued at anywhere between 5 to 7 times price to sales. The reason being, they are growing at rapid pace and they're going to accelerate even faster. And that premium will play in the price to sales ratio. So which means that it could be valued at around $100 to $140 billion in 2025. The actual valuation based on the underlying earnings potential of Shopify in 2025 could be around $140 billion max. This means that, and it's currently trading at around $125 billion approximately, and which means that it has not much significant returns, stock returns. In 5 years from now, it could be pricing in some years of growth even after 2025, right? So, it could be valued at around $180 billion, $200 billion. It could go up. What I mean to say is based on the earnings potential pricing ahead after 2025, but a point in time, 2025, they might be valuation wise worth only $140 billion, which means the potential upside could be just 10 to 15%, not more than that. So that is where, so it could be an end of returns for Shopify, and potentially Amazon would be an underplay. 15% 5 years it's still decent returns. That are in the best of conditions. Now, existing brick and mortars, and why is this happening, right? So the existing brick and mortars giants like Costco, Walmart, Target, Home Depot, they all could be shifting their physical presence to online presence, which might not benefit incumbents like Amazon to gain new market share significantly. Plus, the retail is getting democratized like anything, like no precedence. And this is powered by the giants like Shopify and BigCommerce, Wix, and all of them. And anybody could set up a store online. Anyone can start. So the powerful democratization could take away market share from Amazon and Home Depot, and many of them. You could see Wayfair trending up a lot. So it is a trend that's going to disrupt a lot of existing incumbent players. Having said that, the gist of the message: Amazon, Shopify, Walmart may not have significant stock price returns from this point. It might max double in next 5 years, and which is not very high. And it's because it's pricing in next 4 to 5 years of retail e-commerce shift and growth and market share gain. And things could change if cloud gets delisted. I mean, get separately listed, and we don't know whether AWS is going to be spun off, but we'll wait and watch. Now, anyway, that is the precise message. It has priced in, market has priced in 3 to 4 years of growth already on this transformational physical to online retailing in US. So there could be time-wise correction. Again, please note the point that it is not going to fall like anything. The stock price might hover around range bound for a long period of time due to the high valuation, and it could be a time-wise correction than price wise correction. And the shift to digital is bound to happen, inevitable, and we will watch. And whether it is 50%, 40% in 2025. But that's a message I wanted to pass. Hope this was helpful, and thanks for joining with me.